Dear student, Assalamu alaikum. I hope all of you are fine by the grace of Almighty Allah. I am Mohammad Shahjahan, Assistant Professor, Department of Accounting, Milestone College, Uttara, Dhaka.
Dear student, today we will discuss depreciation. This is our first lecture on this chapter. Dear student, at the end of this lecture, you will be able to know about depreciation of fixed asset. You will be able to know about depreciation's method. Dear student, you can know about factors to be considered at the time of charging depreciation, and you can give journal entries for recording depreciation. Let's come to our class. Dear student, at first, what is depreciation? Depreciation may be defined as the permanent and continuing diminution the quality, quantity and value of an asset. That means with the passage of time, if the value of asset decreasing, then it will be treated as depreciation. Dear student, depreciation is a process of cost allocation, not a process of asset valuation. That means it is a process of cost allocation. We will allocate the cost among the lifetime of the asset. Dear student, depreciation is an estimated loss. The actual amount of depreciation cannot be determined, it can be assumed. That means whatever depreciation will be determined, that is only assumption. Actually, this is not actual amount. It is a non-cash and invisible transaction. Dear student, depreciation is a non-cash transaction and it is also an invisible transaction. It is calculated considering the total cost of asset, estimated life of asset, salvage or scrap value of asset and depreciation method. That means the depreciation is calculated by considering the total cost of asset, estimated lifetime of asset, salvage value or scrap value of asset and depreciation method. Dear student, now factors to be considered at the time of calculating depreciation. That means what we will consider while we will determine the depreciation. Number one, total cost of asset. That means whatever the cost of asset, that is the first factor to be considered. Dear student, you know that cost of for determining cost of asset, we have a formula. That means at first we have to write the purchase price of asset. Then with that we have to add the extra expenses, that means carriage, packing, installation, whatever extra expenses occurred for that asset, that also be included in cost of asset. Previous chapter at the time of doing journal we have learned it, the value of asset plus purchase price of asset plus other direct expenditure for that asset also be include the cost of asset. So total cost of asset means purchase price of asset plus other direct expenditure for that asset. Now, estimated working life of asset. You know that earlier I have told that depreciation is a assumption process. So we have to assume that whatever asset we have purchased, suppose you purchase a machine, the lifetime of that machine you cannot imagine now. It may work 1 year, 2 year, 3 year, 5 years, 10 years, 20 years, 50 years. But we have to assumption that how long it will work. For depreciation, charging depreciation, we have to find the estimated life of asset. That means this is an assumption. Then scrap or salvage or residual value of that asset. That means at the end of the lifetime of asset, whatever the value we can sell it, that is scrap or salvage or residual value, that also be we have to assumption now. Then phases or uses time, that means how long we can use this asset, that is also a another assumption for calculating depreciation. Dear student, now methods of depreciation, this is most important. Dear student, you know that for charging depreciation there are lots of method, several methods for calculating depreciation, but in your class we will discuss only two of them. That means there are lots of depreciation method. In senior class we will discuss that, but in your class In our syllabus, only two methods. So we'll discuss out of that only two method. Number one, it is a straight line method. Straight line method. In this method, every year the amount of depreciation will be same. That's why it is known as straight line method. The formula for charging depreciation in straight line method is cost of fixed asset minus residual value. You know that scrap value. Cost of fixed asset, that means total cost, purchase price plus other direct expenditure, minus residual value or scrap value divided by useful life of asset, that means estimated lifetime of that asset. Then we will find the value of depreciation. So dear student, very easy. Today you have to learn this formula. Then inshallah in next class we can do the math. Cost of fixed asset minus residual value divided by useful lifetime of asset. It will be amount of depreciation. In another way, you can charge depreciation in a straight line method. That is, in this method, in this way we will find out the depreciation rate in straight line method. That means we will find out the rate of depreciation 100 divided by estimated life into 100. Then it will be estimated, it will be rate of depreciation, it will be rate of depreciation, that means depreciation percentage. Then with that percentage also we can calculate the depreciation under a straight line method. That means in a straight line method we can use two formula for charging depreciation. One is direct, like cost of fixed asset minus residual value divided by useful lifetime. Then it will be depreciation. You can take an example. If you can take your calculator, cost of fixed assets. Suppose you buy an asset by taka 1 lakh minus residual value. Assume that it is 10,000. So 1 lakh minus 10,000, it will be 90,000. Useful life of that asset, assuming that it is 10 years. So depreciation for each year will be 90,000 divided by 10, that means 9,000. That means 9,000. Look at now same asset, depreciation rate. If we calculate depreciation rate, look at depreciation 100 divided by estimated life. 100 means 100, estimated life earlier I have told 10 years. That means 100 divided by 10 into 100. That means it is 10%. It is 10%. If it is 10%, then what will be the amount of depreciation? Earlier we told that the value of asset is 1 lakh. 1 lakh minus residual value 10,000. That means 90,000. 90,000 into 10%, again it is 9,000. That means in both method the amount of depreciation will be same, but we can do this, we can follow this rate method. That means we will find out rate at first, then we will charge the depreciation, or we can directly calculate the depreciation. Dear student, now another method, that means method number 2. Earlier we have charged depreciation in straight line method. Now declining balance method or residual balance method. That means declining balance method or residual balance method. This is another method of depreciation we will discuss in your class. Declining method or residual balance method. In this method the depreciation rate is 1 minus n power root over residual value by cost of fixed asset, where n is the estimated life of the asset. That means in n you will write it is years, 10 years, 5 years, 20 years, this way. Or depreciation rate equals to, or depreciation rate equals to 100 divided by estimated life into 2 into 2. This is the easy method. This is the easy method. Look at depreciation rate. That means at first we will calculate depreciation rate. 100 divided by estimated life, 100 divided by estimated life, 100 divided by estimated life. If earlier 100 divided by estimated life, it is 10. If we take same example, 100 divided by estimated life, so 100 divided by 10, it is 10 into 100. It method, that means 10% into 2, that means 20% rate of depreciation in a reducing balance method. So this way, this is alternative one is easy one. Inshallah we will follow the second one, and this one also you can follow. Okay, now journal entries for recording depreciation. Dear student, only 3 journal entries we have. Purchase of an asset, we will write concerned asset account debit, bank account credit. For recording depreciation, depreciation account debit, depreciation account debit, depreciation account debit, concerned asset account credit. And to transfer to income statement, we'll write income statement debit, depreciation account credit. Income statement debit, depreciation account credit. That means, dear student, these three journal also you have to memorize. Number one, to purchase an asset, asset account debit, bank account credit. Record depreciation, depreciation debit, concerned asset account credit. Accumulated depreciation account credit, depreciation account